What's going on, guys? So today I'm going to be talking to you guys kind of about my investment strategies. This isn't completely just drawn towards crypto because it could be used for other investments as well, but this is mainly about crypto right now because I've had quite a few people at work and quite a few friends in general just kind of ask me questions on my investment strategies. As everybody knows, this is not financial advice. I'm not a financial advisor, but I am willing to share my own personal investment strategies and pretty much kind of the things that I follow to take as little loss as possible and try to make as much profit and gain as possible at the same time. So anyways, guys, without further ado, let's jump into this. Okay, so here's my crypto investment strategy right here. So we're just going to go and tackle all this at once. So this is my basic slash simple investment strategy right here for entry and exit. So pretty much I always want to invest 10 to 30% of my weekly or bi-weekly income into stable coins. So I'll explain this here really quick. So the reason I invested into stable coins is because I always want to have at least 10 to 20% of my funds in stable coins just in case there's an event like a flash crash or some kind of downtrend in the market that I want to take advantage of. But anyways, guys, always wait for preferred entry. So that pretty much touches down on what I was just mentioning. So you're always going to want to wait on preferred entry point for a small, mid cap or large cap crypto. So pretty much just any investment in general, you're going to want to wait for entry points. You just don't want to FOMO in and just jump in right at the top. So if things are green, it's probably not the best time to jump in my personal opinion. So what I'm doing here is I'm always wanting to buy in right away, and that's a tough urge to fight, guys. So when I first started, I always wanted to just buy in the second that I heard something. So like guys like me who do these videos and you guys see these videos, like honestly, if I upload a video and something is going up, I'm not going to give you financial advice, but I would personally proceed with caution, and I would usually wait until things become red before I start evaluating things, unless there's something that's very, very bullish that came out about whatever it is that I'm looking at. But anyways, guys, for example, if I have a monthly income of $8,000, that means my weekly income is about $2,000. So if I take $20,000 from that to invest each week, I would actually need to move $400 from my paycheck into the crypto market each week to make up that amount. So this basically makes the dip buying a lot easier when it comes to dips occurring and flash crashes. Alrighty, so let's say after 5 months of doing this, let's say 3 out of those 5 months were during a downtrend where I was actually accumulating BTC mainly at a negative 30% rate. So that means Bitcoin went down 30% 3 of those months. So 3 out of those 5 months, Bitcoin went down 30%. That would mean I invested $4,800 out of that $8,000 during that 5-month period into Bitcoin while it was down 30% throughout my weekly $400 investment strategy. Okay, so let's say after the 3 months of downtrend, the next 2 months to complete that 5-month period, the next 2 months, Bitcoin had finally recovered completely and was sitting at a even 0% from before it drops 30% down. That would mean during those 2 months, my $8,000 would actually have been $3,200 invested, because $4,800 plus $3,200 equals $8,000. So pretty much my $3,200 invested from my $400 weekly income sat stable as Bitcoin was stagnant in consolidation because I invested that $3,200 while it was at 0%. But remember, my $4,800 that I invested 3 months prior while Bitcoin was down 30% is now up 30%. So now I'm up 30% on $4,800. This would actually mean that my gain for 3 months was a total of $1,440, turning that $4.8 thousand into 6.24K. So $6,240. So with that being said, on the 3-month dip, that's how much I would have made off of that 3 months of investing. And now let's say I would then have a total amount of $9,440 that will continue to grow over time, because that amount that I invested while Bitcoin was sitting stagnant at 0% is more than likely going to go up as Bitcoin continues to move forward. But we can't always say that Bitcoin is going to continue to move forward because things happen. But theoretically, Bitcoin has continued to move in a very, very straight uptrend line over time. So that is something that we can kind of try to hedge our bets on. Alrighty guys, so just to make that a little bit easier to understand here, as you can see here, my monthly income is $8,000. And that means in order to take and make that divided into the weekly that I get paid, that would be $2,000 a week, which adds up to that $8,000 because there's 4 weeks in a month. $2,000 times 4 would be $8,000. So with that being said, if I take 20% from $2,000, that would come out to a total of the $400 a week, of which that I would be investing into crypto, right? Okay, so with that being said, now we get into this blue area down here. Let me move this out of the way. Keep an eye on the calculator as well down here. So we have $400 that we're investing a week, which comes out to $1,600. So like I said before, let's say 3 of those months it was in a downtrend. So we'll do the 1,600 times 3 because it's been 3 months now. That's $4,800, which is where I got this $4,800 from. I invested this into Bitcoin at a downtrend while Bitcoin was down 30% with that $400 weekly investment. So after doing that, the next 2 weeks, let's erase this out. The next 2 weeks, the next 2 months, my bad, we invested another 2 months. Okay, so that would be 8 weeks. So that would be $3,200 out of that 400, and we invested that while Bitcoin was stagnant and not going anywhere, right? So then after that, we would come back, look at this $4,800 that we invested while Bitcoin was down, and we would plus that by 30% because Bitcoin has gone up 30% in that time, which was where we got this $1,440 from. We'll hit equals, and that would equal $6,240. And then we would add that by the $3,200 that we invested 2 months ago that didn't go anywhere because the price didn't go up or down. So that would be plus $3,200, and that's where we would get that $9,440 from that will continue to grow over time theoretically. So if that was a little tough to keep track of, definitely don't hesitate to rewind it, kind of write down and follow what I'm saying, and then add it up on your own calculator so that you can understand what I'm getting at here. So then you can kind of work out how it would be if you were to use your own income, if you're interested in seeing how that would work out in your own personal situation. But anyways, guys, we are going to keep going here. So if you guys need to go back, definitely move the video back and then come back ahead whenever you're ready to watch the rest of it. So the next point we're going to touch down across is when the market is extremely bullish, which means things are going up and they're just going up and you're making a lot of money and you're just thinking that you're about to become a millionaire. That's when greed reveals itself. So when greed reveals itself across the board, slowly start to take profits each leg up. So what I'm saying here is whenever you see all your friends who weren't investing before and they're coming out and talking about Dogecoin and stuff like that, and they're all jumping in on it, that's usually when you want to start taking your profits, because then it'll go back to the time where your friends weren't really saying anything about Bitcoin and cryptocurrency and whatnot. One thing that you guys can kind of look at here is this right here, which is the greed and fear index, which kind of gives you the general market sentiment. So pretty much right now we are in an extreme fear period, which means there are a lot of investors who are actually very fearful of investing. And this is usually the time where I like to come in and buy the dip, because usually when you're around this range here is when it's a great buying opportunity, which is when I buy that negative 30% Bitcoin, and then it ends up recovering and goes back, and then that's when we hit that neutral point. And then once it goes past that 30% and then it's up like 80%, that's when we hit that really, really extreme greed point. We hit that greedy point and everybody's making money. So that's usually when I start taking profits, when everybody's making money, because everybody can't make money, you know what I mean? The money train is not going to go on forever, and the charts are going to have to go down in order to come back up, and it's just going to be a repeating cycle. So that's pretty much what we are looking at whenever I'm saying keep an eye on the fear and greed of whichever investment market that you're investing in. This happens everywhere with real estate, kind of like with the real estate bubble right now. Houses are going for insanely high rates. That's not going to last forever. Just like the housing bubble that crashed back in, I think it's like 2008 or something like that, prices are going to go down, guys. So pretty much if you have the time and you can wait, so like pretty much what I'm doing, I have the time, I can wait. I'm not going to buy a house right now. I'm going to wait until the housing prices drop, and then that's when I'm going to jump in, is when everybody's getting extremely fearful about where the market's going, and they're trying to secure some sort of money, so they're willing to let their house go for a lot cheaper. So that's when I'm going to come through and swoop up those great deals, right? So this is pretty much what I'm trying to get at with this here. Another great indicator that you can use is things like CoinGecko, CoinMarketCap, or even your exchange. I think KuCoin actually has it on their exchange. So pretty much what I use here is I'll go through and I'll look and I'll kind of filter through the top losers, and I'll check out the top losers, see if there's any losers that I actually do have faith in. And if they're down a decent percentage, that's when I'll come through and I'll buy that dip. I'll also keep an eye on top gainers as well, because if there's something that's up like 30%, then I know it's about to pull back soon. So I'll add that on my watch list, and I'll sit and I'll wait for that pullback. And whenever that pullback finally does happen, that's usually whenever I jump on it. But sometimes, guys, this doesn't always play out in that matter, because sometimes there's different things that kind of fuel different market situations. So what I'm saying here is you could be looking at something that's up 30% and waiting for it to drop down, and you're like, oh, I'll catch it when it drops down. But there's some very bullish news that's came out, and the tokenomics has changed. Like, let's say there was a very massive burn that recently happened, and then there's some other government news that came through, and just there's adoption news and stuff like that. Then there's more than likely a chance that this crypto is going to keep on moving, and those prices may never be seen again. So this is why you always have to kind of take things into consideration and make your own personal investment decision when it comes to things like this. So it can get very tough to make these decisions at sometimes, but the way that I look at it is I make my decision and I stand with it. So if you miss out on that 30% run, or like that 100% run, because you think it's going to fall down, then hey, you didn't lose any money, you just missed out on an opportunity. But there's always opportunities out there, versus where you jump in on it and then it actually does start to pull back, and then you just lost some money unless you don't sell. We don't lose money unless we don't sell, you know what I mean? So if you were brave enough to hold it and hope that it goes back up and recovers completely, and it wasn't just like a pump and dump situation, then you can go ahead and go through with that. But anyways, guys, let's keep on going with this, because we got a few more points to touch down on. So the next point that I want to touch down on here is closely related to what I was just talking about with the greed and the slowly taking profits each leg up. So pretty much by slowly taking profits each leg up, you're protecting yourself, because when the market is fearful and mass greed has faded, you can dollar cost average, which is what DCA stands for, each leg down. So the more that it goes down, the more you will dollar cost average into the market. So pretty much for me, that would mean each leg down is about 15 to 30%, depending on the project that I'm accumulating. So the project in question is going to pretty much project how much I'm going to add onto that crypto. So if it drops, let's say it's like Bitcoin, that means if it's Bitcoin, every about 15% I may dollar cost average into it. But let's say it's something like Matic. If it's something like Matic, I might try to jump in every 30% dip or so instead of doing every 15%, because the fluctuations are completely different between the two. And just to add a little bit more clarity to the fluctuation metrics that I was speaking of, here is the chart for Bitcoin for the 30 days, which is for a month. As you can see, it went down astronomically. Well, not astronomically, but it went down a very nice bit. And then we're going to look at Matic right here, which actually held better than Bitcoin in my personal opinion. So in this situation, it might have been better to put your money in on Matic if you were actually trying to kind of sustain your wealth. But if you were actually trying to buy a dip opportunity, then Bitcoin may have been something that you wanted to look into, depending on your take on whether or not things are bearish or bullish in the market at this current given point in time. With all of that being said, another rule of thumb that I like to go by is securing profits frequently. So I'll frequently remove my initial investment on a low cap altcoin when I am in profit of 2x or more, which is 200% or more. So let's say I'm in on an altcoin and out of nowhere it shoots up about 200%. That's when I take my profits, and I take my I don't take my profits, I take my initial investment out. and I leave the profit there. So if it wants to keep going, I'm still making money. But if it starts dropping, the only money I'm losing is house money, guys. So basically, this is my kind of way for a more risk tolerant pretty much portfolio during times of volatility. So this pretty much helps my portfolio based on in-house market money. So whenever the market's moving up and down, I'm not getting completely just decimated and hurt by it, because the money that I'm losing is profits that I made that I didn't have before, and the original investment that I have is safe in a stable coin and waiting to be redistributed out somewhere else. So with that being said, I personally take profits during extreme greed phases and let profits sit in stable coins very frequently until fear sets back in. And then once the fear sets in, this could take months, weeks, or even days in some cases, but patience is going to be needed here, in my personal opinion. So I'm always like coaching myself, be like, yo, you got to be patient, bro. You got to be patient. Don't jump. Don't pull the trigger yet. Don't pull that dry powder out yet. Just wait. So it's pretty much just you got to be very, very dedicated and stick to the plan, man. You got to stick to the plan and you got to be consistent. But patience is definitely going to be needed in order to be rewarded deeply on recoveries, because sometimes you might get caught up in a bull trap. So pretty much what a bull trap is when the market's starting to jump back up a little bit. Well, I mean a bear trap, my bad. So what a bear trap is when the market is starting to go down a bit and you put some money into it. All right, now hold on, guys. Let me flip back over. I'll tell you guys what both of these are. Okay, so a bull trap is whenever the market is starting to recover and it's starting to go up from a downtrend, and you were thinking it was going to go down more, but it starts going up. It has a quick little bounce, starts catching a whole bunch of investors and bulls, people who are bullish and think the price is going to go up, are going to start putting their money into it. And then here's where the trap comes into play and catches the bulls. Right after that happens, there's a huge, massive sell-off, and the bulls are trapped in a downwards trend. And that's pretty much reverse of what happens for a bear trap. So with the bear trap is the chart looks like it's going to continue going down, so bears are going to continue to sit here and wait and try to buy lower so they can make more money on the way back up. But that fails and we have a swift bounce upward and it doesn't look back, and the bears are stuck having to make the decision of waiting longer or buying in higher. So that's the difference between both of these traps. But anyways, guys, I'm definitely always taking profits and reinvesting profits into the market when I find times that are suitable. Next up, we have the God-given market gift of limit buys and limit sells. So pretty much no one can always perfectly time the market, guys. So setting a limit buy order can actually help you buy those swift dips, kind of like when we had that China flood and Bitcoin crashed straight down. If anybody had any limit buys set really low during that point in time, their buys got filled and they got to buy pretty much as close to the bottom as possible, depending on where they set those buy orders. And the same thing with sell limits is pretty much setting a sell order can actually help you sell an uptrend before any possible downside is revealed. Or that sell order can also help protect you. Like, let's say Bitcoin did crash down the way it did, it would actually execute that sell order for you, and your sell would actually kind of act as a stop loss, and it would stop you from losing any further money on the way down. So that's a way that you can use that in both situations. So pretty much what limit buys and orders are used for is you pretty much set a limit that you're willing to buy at, and then once it hits that limit, then the exchange will automatically make that purchase for you with the amount of money that you agree to put in. So let's say you want to buy Bitcoin once it reaches $43,000 with $500. You put in that limit order to buy at $43,000 for that amount of money, and then once it hits $43,000, then that transaction will go through once the order can be filled. Same thing with selling. So this is definitely another great thing to look at whenever you're making entry and exit points when it comes to investing in crypto stocks anything like that, I would love to use limit buys and sells because no one's sitting in front of their computer 24/7. So this definitely helps with that because it can help you kind of make the trade while you're not physically there to make the trade. And then there is staking. Staking is its whole own entity, guys. So pretty much with staking, I tend to stake as many promising altcoins as I can because this helps decrease the downside over time and gives a rewarding incentive to holding, especially when the price is in a uptrend, all while increasing the size of my crypto bags. So pretty much what staking is, for those of you who don't know what staking is pretty much a project's way of incentivizing its holders. So pretty much, let's say you have Bitcoin. You can't stake Bitcoin, so I'm not going to use Bitcoin. Let's say that you have Ethereum. So we have ETH and we want to stake ETH, right? So pretty much by staking your ETH, let's say you have 5 ETH and you stake it. By staking your ETH, you'll get a percentage paid out to you over a certain period of time, whatever that is, whether it's API, APY, anything like that. Then you would get a percentage paid out to you in Ethereum for holding your 5 tokens inside of that stake. So pretty much this is going to kind of work kind of like a savings account with a bank, but it pays you way more than a bank because the percentages on crypto staking right now definitely completely just knocks banking percentages out of the water when it comes to return on investment. So pretty much that's the way that works, guys. So a few alts that I'm actually currently staking right now is VRA, which is Veracity. I'm also staking ADA, which is Cardano. I'm staking XPR, which is Proton, VET, which is VeChain, One, which is Harmony One Protocol, Hex, which is Hex, and soon Pulse Chain as well. So definitely look into Pulse Chain and Hex, guys, because that's a very interesting project. I know there's a lot of hate and like a lot of opposing views on it, but in my personal opinion, I personally like the concept. But anyways, guys, that's my whole take on staking. So whenever you're investing in a coin that you can stake, in my personal opinion, I always choose to go ahead and at least stake a little bit of it. I usually don't stake everything just in case there's a massive move up and I need to sell, because sometimes whenever you stake, kind of like with Veracity, then you are locked in for a certain period of time. So like, let's say you unstake, you have to wait, I think it's like four days before you can actually get those funds and then into your main wallet, and then there's another whole day that you have to wait before it can actually be sent to an exchange. So that's 5 days in total to where you don't have access to that. So let's say there's an emergency, like a personal emergency where you need to unstake and get that money. You can't get that money right away sometimes, but there are certain cryptos where you can actually unstake and you can get that money out. But with every different project, there's different kind of policies with that. Kind of like with Hex, if you want to unstake, then you will get penalized heavily for it unless you are very, very close to your in-stake period. But when it comes to stuff like this, guys, this is why it's important to read white papers and to look into crypto projects and to know what you're getting yourself into before you start investing. So that's definitely something to keep in mind there. But that's my whole take with staking. And actually, before we close out here, one last thing that I do want to say about staking is that whenever you stake and you're getting those extra tokens, it actually can pay off in the long run, because imagine Cardano right now is trading at like a few dollars. Let's say that within the next couple of years, Cardano's at 20 bucks and you've been staking this whole time and they've been paying you out about 5 Cardano each time. So now that Cardano's at 20 bucks and you're getting 5 Cardano each time, so every week you're getting about 5 Cardano. That is 2, 4, 6, 8, 10. That's $100 that you are making from your stake a week, guys. So the more the price goes up on whatever crypto you're staking, the better, because that's the more you're going to get paid out on a weekly, daily, monthly, yearly basis, depending on how that crypto operates with their staking protocol. So with that being said, that's the last thing that I wanted to talk about on staking. And one last thing that I actually do want to bring up is this here. So here's the last thing that I want to talk about now is the Ledger Nano S, or just cold storage in general, guys. I'll have a link to Ledger in my description below. I also have a video that I did a few months back on why I think these things are important. So this is cold storage. So pretty much what cold storage is when you keep your crypto on most exchanges, you don't own the keys to that crypto. So there's a saying in crypto, not your keys, not your crypto. So technically that crypto is not yours. That crypto is being pretty much leased out to you from the exchange. So they're like, here, you're giving me this money, we're gonna hold this crypto for you, but you don't own the keys. We still own the keys. So if we're ever hacked or something happens, then you're gonna lose that crypto because you're just gonna lose it. So with cold storage, that cannot happen because you own the keys to your cold storage wallet. They'll give you a key phrase that you need to write down and do not lose, and that's how you will keep track of your crypto. They have an app where you can keep track and you can kind of look at your funds and whatnot. And with this, the thing that I like to do with this on my like short-term and long-term investment strategies, for long-term, I like to go ahead and I'll put a decent amount in there. I'll put maybe about like $500 per different project in there. And when I do this for long term, I'm doing this because I'm doing this over the period of 3 years or longer. So that $500 could actually like 1,000x, 10,000x over that 3-year period, depending on what project I'm investing in. So the little $500 isn't too much to me. So whatever isn't too much to you, you would put in there and pretty much just kind of wait if you were trying to copy a similar investment strategy to what I'm doing here. But as I said before, this isn't financial advice. I'm not a financial advisor, but I'm just simply telling you guys, like, if this is what I'm doing and then you did this the same exact way, then maybe you'll have similar results, but maybe you'll have different results, if not better results or worse results. So there's no way to really kind of gauge this. It's just, you're gonna have to dip your own feet in the water eventually. So I'm just putting this out here to kind of like help people kind of see how I operate, so they can kind of figure their own way to operate out on their own, you know what I mean? But anyways, guys, that's my take with cold storage. With the short term, I don't really put short-term things on cold storage very often. But if it's something like I feel like very uneasy about leaving my crypto somewhere for whatever reason, I'll always move it to this cold storage, because this is, in my personal opinion, one of the safest places to have your crypto. There's other cold storage wallets like the Trezor and stuff like that, but I personally use the Ledger, so I'll be putting a link in the description below. So if you guys click that and you guys get a Ledger, you will be helping the channel out while also helping yourself out by getting one of these to protect your crypto. But anyways, guys, that's all I've got for today's video. If you guys have any questions about my investment strategy, leave them in the comment section below. I'll be glad to address the comment and whatnot on that. But anyways, guys, that's all I've got for today's video. If you watched the video all the way to now, I really appreciate you guys, and I really appreciate everybody for showing the channel support and for leaving very, very nice and positive comments. And also thank you for leaving the negative comments as well, because I need that negative feedback as well to kind of work on the channel. But anyways, guys, that's all I've got for today's video. Appreciate you guys for watching. See you in the next one.